probably asking yourself, wait, what's good about a crashing market? Well, you can make money on a crashing market, and that's exactly what we've been talking about the past couple of weeks here, because we've been looking for this reversal. We've been looking for this inflection point to complete and us to move back to the downside, potentially to set a new low. That's exactly what happened this week. And it happened pretty much exactly when you would have expected it. You got the CPI print on Tuesday, which came in, quote unquote, cooler than expected. That is such mind control, because ultimately inflation is still rising at this point. But the next day you have Jerome Powell come out with the 50 basis points, and everyone thinks, oh, only 50 basis points. Perfect. We're going to the moon. It's like, no, you're not. You're not. You're actually going to new lows. And that's exactly what happened. So look at this trend line. This trend line is a deeply woven, self-fulfilling prophecy. You bounce off it again, and now you're moving to the downside. I think the first reasonable target is the 200-week moving average. But as you can see here, there's pretty clearly defined channel at this point, and I think it's quite possible that the conclusion of this move could be at the lower boundary of this channel. Now, there is an interesting confluence with the lower boundary of the channel. It happens to be just right around the 1618. So, yeah, I think this potential down move that's getting started right now is likely the bottom. This is heading to a very significant bottom. Whether that bottom takes us to new highs, that remains to be seen. I don't know. I don't need to know. But I do think that this is going to be kind of the big cathartic capitulation bottom that we've been looking for, at least since literally the beginning of the year. You know, we've wanted this market to reverse to the upside, but you know what? These things need to take time, and it actually makes sense. Everything that's going on right now makes a lot of sense when you consider the interest rate rising cycle, because at some point this market is going to move to the upside as interest rates continue to rise. Now, if that doesn't make sense to you, go back and watch other white knuckle videos, but I will say very simply, why is it that the market rises with interest rates historically? How does that historically make sense? Well, it's very simple. It's because when interest rates rise and inflation starts to come down, that means that consumers have more spending power. When consumers have more spending power, they spend money on corporations like Amazon, like Tesla, like all the different car companies, airlines, vacations, you name it. Corporations make more money when inflation is down. When corporations make more money and corporate earnings rise, the stock market rises. This is why rising interest rates actually cause the stock market to rise. So what I want to point out here is how there is quite an interesting confluence with what the DXY is doing as this reversal starts to take shape here. So you look at the DXY here, and you look at this weekly candle, and you see that this weekly candle looks kind of bullish, right? It basically looks like the inverse version of this candle. And what happened after this candle? Massive downside follow through. Now, I've said I do think the DXY is in a bullish correction right now. I actually think it's likely to go to new highs. And when you look at this structure and you see this bottoming tail here, you see that this very likely is a bullish correction. Now, there's no telling how high this thing is going to go after this correction, but the good news is you're starting to see that frothy phase of the DXY here. When you get to the top of a given asset, the volatility increases, right? And so this is sort of your first signal of major volatility in the DXY. This is still definitely bullish volatility, but when you start to see that big volatility, you know that you're getting close to the end of a major cycle here. Now, there is one asset that I've been looking at that kind of reminds me of the DXY and what it's doing right now, and it's actually Tesla. So check out this, right? Look at Tesla back here. Look the way that it's responding to these moving averages. Look where it came down to. Look where it found support before moving aggressively to the upside. Now, I'm not necessarily saying the DXY is going to do what Tesla did. You know, I don't know about that necessarily. But the correction that we're seeing in the DXY definitely looks bullish in the same way that this correction in Tesla looks very bullish. It fell through all three of the moving averages, but ultimately found support at the 200-day moving average, never got too close to the 200-week moving average, very similar to the DXY. And what's also interesting is, look, Tesla actually pierced below these support levels, right? So that's one thing to keep in mind, is that just because an asset pierces below certain support, that doesn't mean that it's suddenly bearish, because look what happened to Tesla. Markets are very, very overreactive, especially in the phase of reality that we're in right now. People are super emotional, so markets are super emotional. So this big correction that happened in Tesla, some people might have thought, oh, it's over, that's the crash, Tesla's going nowhere now, but it's like, look what happened next. That's kind of what I think the DXY is doing. You fell through three moving averages. You're still way, way above the 200-week moving average. And so far on the DXY, you never even tested the previous highs. So maybe the DXY has more to fall. That's definitely possible. But ultimately, I think it makes the most sense that the DXY is actually getting very close to completing this bullish correction before potentially setting new all-time highs. And I would say that the first high that you're looking for is probably that 1618. So obviously, you can extrapolate that if the DXY is heading to this 1618, that means the markets are heading down pretty significantly. And I think what we saw this past week was the start of maybe that more aggressive downside move right here. And you could even make the connection that this 1618, it's basically just like the inverse 1618 of what the DXY is doing, right? So how are we making money here? Well, we're shorting. We're buying puts. We're expecting the prices to go down, and we're positioning ourselves to do that. Now, in future White Knuckle episodes, I'm going to get into options trading, because options are basically how you get the same gains that you would get in like an altcoin season, but you can get them on relatively small price swings in the stock market. And I'm saying relatively small compared to crypto, where you have like 5,000% moves. But in the stock market, this move ultimately down to this 1618 from the top, this is like going to be maybe what, like a 20% move or something? Let's just see really quickly. Something like this. Maybe a 24% move. Let's call it 20% move. Who really knows? But point is in the stock market, you don't see like, 500% swings, 1,000% swings. Your kind of benchmark swing, if you're trading these indices, is like 10, 20%, those kinds of moves. But if you're using options, you can turn those 10% moves into literally like 500% moves in terms of how much you're multiplying your money. So that's a topic for another day, because today, like I said, I just really want to establish that I do think that this local top is in, the inflection point has completed, and I think we're heading to the downside. Now, we're heading to the downside in waves, for sure. We don't really know how these waves are going to play out, but I think it's safe to say that you might be seeing potentially a retrace to the upside this coming week. Maybe you're going to move back up, potentially to start a wave 2 before the wave 3 starts to take shape, something like that, because you've had a lot of downside in the past 2 weeks, right? So I think it's possible that maybe it's time for a pullback, but in this case, the pullback is moving to the upside, and then that's going to gear up for the aggressive, powerful wave 3. Now, here's the thing that we want to keep our eye on if we're sort of hunting for that bottom and we want to know when to take profits on our trades on the indices. It has everything to do with the VIX, right? Because what you can see here on the VIX really clearly is the VIX is also completing its inflection point, right? So as the VIX goes down, the market goes up. But right now, the VIX is starting to move to the upside. So that's confluent with the market moving down, which is obviously what we're seeing in the S&P 500. So look at the VIX on the daily chart, finding support above the 200-week moving average. I think it's safe to say that the VIX is moving to the upside. Now, depending on the aggressive nature of this upside move, this could give us that signal that we actually have seen a capitulation bottom in the market. Now, what does that look like? I've shown this before, but what we're looking for on the VIX to really solidify the bottom is something like this. you need a spike like this on the VIX to really solidify a significant bottom. This is obviously the bottom from March 2020. So is it possible that we're setting up for something like that? Maybe, maybe not. My only point is, when we see a move like this on the VIX, we can be pretty confident that the bottom of the stock market is in. So right now, we just want to kind of keep our expectations in check. We don't really know how high the VIX is going to go on this move here, and we don't know how low the stock market is going to move on this move here. But we have certain indicators that are going to tell us when these moves are getting exhausted. Let's kind of talk about Bitcoin really quickly, because what does this all mean for Bitcoin? Well, see, now you look at Bitcoin and you look at this weekly candle and you're like, yikes, dude, yikes. That's not looking great. But thing is, I definitely think Bitcoin is in a bottoming phase for sure. And like we've seen previously, you know, when the Dow Jones was making new lows back in October, Bitcoin didn't make new lows, right? So I think it's possible that Bitcoin could be holding around these levels, even if the market is going to sell off, like the stock market is going to sell off aggressively. Don't rule out the fact that we're pretty freaking close to a bottom here. And in my mind, I can't justify, selling crypto because I'm going to be able to buy more later. No. Like I said before, crypto is a long hedge for me. I don't really care how low it goes. I'm just going to keep buying more. But I need to make money to keep buying more crypto. How am I making money to keep buying more crypto? Well, I'm trading the stock market and I'm using options, and I'm using those to increase my cash position so that I can continue to buy more crypto, because I do think that crypto is going to freaking do epic things in this next cycle. Like we've talked about, the next Bitcoin halving is happening in April 2024 out here. I think it's reasonable to expect that by the end of 2024, Bitcoin could be at freaking new all-time highs. And I think it's also possible that the stock market could be at new all-time highs around that time as well, because we have seen that Bitcoin and the stock market breaking new all-time highs usually at the same time. So you definitely have to expect that the stock market is going to turn bullish if we expect Bitcoin to turn bullish as well. And I think that's very reasonable to expect, because like I'm saying right now, I think it's reasonable to expect that the stock market is about to find a bottom here. And I'm talking a bottom in like Q1 2023. Like that's very, very, very soon. Now, it could take a very long time, like an entire year, for that bottom to kind of base out and start to move to the upside with any type of purpose. But that's fine, because there's still, a year and a half, or a little less than a year and a half, before the next Bitcoin halving cycle. So we're in one of those phases where we're going to have to be patient. But I do believe that the move setting up right here is going to be our most profitable move that we're going to see in 2023. It's going to be the most volatility that we've seen in 2023. So it's something I'm definitely going to want to take advantage of. Now, the financial instruments I'm using to take advantage of this move are inverse ETFs, the VIX, and using options on those assets. But let's just look at the assets themselves, right? So SOXS is one that I really like. I've been loading up down here. Now, SOXS is the inverse ETF of semiconductors. So if semiconductors are falling, SOXS is going up. So look at this sort of potential bottoming structure we've seen on SOXS. I think it's safe to say that maybe we've seen the bottom here in this asset. Now let's look at SMH and say, have we seen the top in this asset? Well, SMH is the semiconductor ETF, and this was the weekly candle, could not close above the 200-day moving average. However, it is above this trend line, at least for the moment. We'll see what happens here. I do think that it's probably going to fall through the trend line, because look at this. This is a pretty obvious topping process here. On the weekly chart, you can see these clear supply wicks, like supply is just getting dumped. And I think it's safe to say that the lower boundary of this channel is your target. So when I look at SOXS, I'm saying, this is the higher boundary of this channel, right? I think that's the equivalent. So that's kind of the grand prize I'm looking for. And obviously, you're taking profits the whole way up, because nothing's guaranteed. We don't really know where this move is going to end, but we know where some relevant levels are. Obviously, the 702 is a place you got to be taking profits. And let's just say, in the event that SOXS stops at the 702 and then starts to move to the downside, and SMH stops at the inverse 702 and starts to move to the upside, well, then guess what? We probably just saw the bottom in the stock market. That's definitely a possibility. That's definitely something we have to consider. I just think at this point, it's not the more likely outcome. I think the more likely outcome is that we break this low and we see a very fast crashing capitulation. The thing that we've been looking for, the thing that we need to happen for the stock market to really put in that significant bottom. And of course, it's all confluent with the DXY here. You know, these moves that we're talking about, they're all confluent with the DXY. Like, for example, if the DXY makes it only to the 702, starts to find pressure and then starts to reverse, well, then guess what? That's probably your DXY double top. And that means that stocks and cryptos are probably going to the moon sooner than I'm thinking right now, than I'm speculating right now. But when you consider when the next Bitcoin halving is, it starts to make sense where you realize that this 702 on the DXY is probably not going to stop the DXY. It's more likely headed to these higher levels just from a time basis alone. Because if we're keeping in mind that the next Bitcoin halving is in April 2024, then the DXY has a long time before it needs to start moving to the downside. And during that time, I think it makes a reasonable amount of sense that it's probably just going to keep moving up. And the fundamental case for that is the fact that when interest rates are rising, there is more incentive for people to be holding US dollars, right? Because the yield on capital is increasing, right? You're getting more money for just holding US dollars in your bank. Now, you're certainly not beating inflation, obviously, but theoretically, if some person goes in the bank and they're trying to figure out the most safe way to earn yield on their dollars, the banker can literally tell them, oh, well, just let the dollars sit in your bank account because interest rates are rising, so you're earning more by just having your dollars sit in your bank account. And that's literally true. So as interest rates rise, we can't expect a higher demand for dollars. But remember, as I've said many, many times, when we look at history, we see that interest rates have a positive correlation to the market. When interest rates are in a rising cycle, the market tends to find itself in a rising cycle as well. At the beginning of the interest rate rising cycle, the markets usually find a bottom before rising higher. So how is this possible? How could this be the case if more people are incentivized to hold US dollars because the interest on that capital is increasing, so people are getting a higher yield just holding dollars in their bank account? So why is it that the stock market can rise if more people are incentivized to hold US dollars in their bank account? Well, simple answer. If interest rates are rising, that means that inflation is coming down because gas prices, like we're seeing, gas prices, food prices, they're all coming down. Housing, these things, our overhead, the overhead cost for civilians is going down when interest rates are rising. That's because people are incentivized to hold those dollars. They're not spending the dollars that they used to. So if they're not spending the dollars that they used to, that means demand for goods goes down. That means inflation goes down. So what happens as inflation goes down, people have more spending money because things cost less. Now, what happens when people have more spending money? They spend it. Where do they spend it? They spend it on corporations. They buy more things on Amazon. They buy a new car. They buy plane tickets. They go on a vacation, things like this. When those things start to happen, that's when the market rises because people are spending more money on corporations. Corporate earnings go up. The stock market rises. That's why interest rates rising historically, just like we saw here from 2015 to 29, just like we saw here from April 2004 to October 2007, just like we saw here from literally 1993 all the way to 2001, we saw interest rates rising and we saw the stock market rising. That's because inflation was relatively low at these times and people had money to spend. Corporate earnings were going up and the stock market was rising. Now, remember, in the beginning of these interest rate rising cycles, usually the stock market finds a bottom. I believe we're very close to the beginning of this interest rate rising cycle, right? Because it only began really at the beginning of 2022, right? So we got years of this. But as interest rates sort of reach that cruising speed and inflation starts to cool off, you will see people spending more money. And when people spend more money, corporate earnings will rise. Corporate earnings will rise. The stock market will rise. And that will bring the DXY down as well. So that's kind of this thing you have to balance in your head. It's like, why are the markets crashing right now? Well, because right now, demand is getting crushed, right? Interest rates are rising, demand is getting crushed. More people are incentivized to hold those dollars in their bank account, so demand is getting crushed. But soon, that will balance out. All of the demand that got crushed will just turn into lower prices, meaning that consumers have more money to spend. They're getting more bang for their buck just spending money in the economy, right? That makes sense? So I do think we have to expect that the market is likely to find a bottom in 2023. I definitely think that's extremely reasonable. Now, do we see new all-time highs in 2023 off that bottom? Maybe. I don't know. That remains to be seen. But I definitely think it's reasonable to expect we're going to see new all-time highs in 2024, and that's going to be confluent with the Bitcoin halving. And Bitcoin is probably going to see new all-time highs in late 2024, definitely 2025. And that's something to look forward to. So we got to prepare for that. This is the time to be buying crypto, abso-freaking-lutely, because if Bitcoin goes like it's gone in other bear markets after it has these, huge capitulation downside moves, maybe you still have this to come. I don't know. But remember, Bitcoin halving happened here. This was the last Bitcoin halving. It was May 2020. Right? So Bitcoin was just chilling. It was just flat for a really long time. Well, it wasn't flat, but the volatility was a lot lower during this bear market. I think this is kind of similar to that, right? You're just having lower volatility. It's just not doing anything. But after you get that halving out in 2024 and you start to see corporate earnings rise, that's all confluent with markets rising. Bitcoin will rise with the stock market, and the stock market will rise with interest rates. Inflation will probably be, honestly, quite a bit lower in 2024 than it is right now. At least, I'm speculating that based on what I think markets will do during that time, because in order for markets to move to new all-time highs, inflation will have to stay relatively cool. So that's all speculation. We don't need to answer any of those questions just yet. In the short term, the only thing you need to really realize is that I think it's safe to say markets are heading down. We're going to see some nasty, nasty, nasty weekly candles over the next maybe 4 to 5 to 6 to 7 weeks. This will be an impressive move to the downside. A lot of money to be made here, and I hope you guys are positioned for it. Just start looking at inverse ETFs. This is actually look at this. Here's your link right here. Look at this link. Follow that. Go to that link. You'll find all the inverse ETFs, and this is how you make money on the downside. And if you want to make, a lot of money on the downside, you can use options to increase your exposure to favorable outcomes on these inverse assets. So we'll talk about those maybe next week, but I don't know if I'll be able to make a video next week. We'll see. I don't know. But I hope you guys have a great Christmas, dude. Okay? And I hope you guys just remember everything's good, dude. Like, it's literally good. There's literally opportunity in every possible scenario you can possibly imagine. You just have to learn how the system works, and you have to learn how to make money in every situation. And that's it. So, God.